Welcome to Trading Lounge and the US Indices for the 17th of April, and starting on the daily chart for the S&P, we are looking, as you know, for wave 5 of 3 here top, and let's go in and have a closer look at that. So on the 4-hour chart, pick it up from wave 4 here. We're looking at our last 5 wave structure here, so 1 and 2 and 3 and 4 and 5 here, and we may have a top in place here. We'll dive in and have a little look at that because we're counting 5 waves within this particular structure here. What we can do though is that if this current low here around the 2900, if that's breached, we can short from there. We'll be looking at an ABC correction. This is roughly the 38.2%, so we'll just draw it out here as an A and a B and a C. It may not come all that way back. It may just come back down to the wave 4 of 1 lesser degree into this space here. We'll need to track that as it moves. So let's go in a little bit closer here. So from this wave 4 here, we're looking at 1 and 2 and 3 and 4 here, and then up 4, 5 here. So we certainly can have a top in play here. We've been long from this point here, and we took part profit over here, and we also went long here again as well, and we can move the stop up. We can move the stop up into this space here. I just got to check the tick chart because there can be one more little push to the upside, so just want to go back over that in my mind here. Right, yeah, so from this wave 4 here, I've counted all the little waves here to give me wave 1 and 2 here, and then 1 and 2 and 3 here, an A and a B and a C for wave 4 here, and then wave 5 here of wave 3, and this gives me an A, B, C for wave 4 here. So yes, on the 1-hour chart I've got this is a wave 5 of 5 top in play here. So in this case here, well, we don't need that. I'm just going to delete that, just use that for the daily chart. Let me just go back to the hourly chart here and just 287. Right, yeah, so on the other chart I've got it sitting here and this sitting here, and then we have one more move to the upside there. So that's a real possibility, but this is also a possibility here as well. So I'll just copy that, put that over here, just as an alternative count, because if it pushes through here, then we're on a short, okay? But if it stays above this and works higher through here, then it's going to have 5 little waves to the upside here, okay? And then come down from that point. So that's what we need to be mindful of. So it's pretty simple, really. If the 29 is breached, then we're on the short side. Keep the stop above the 61.8% from that breach of that low there. So from here to here, we need to be above. That. So let's just grab one of these, copy that. So we want that at. Let's just leave it up here out of the way. Let's go back to the tick chart. Just want to have a quick look at that again there. So yeah, so if you're currently long at the moment, then just switch to the short if that's breached. So if you're 10 long, then just put an order in for 20 short, of course. And let's just have a look at this tick chart again. Now, why have I counted it like this for? All of that's okay to here, that's okay, that's okay, that's okay, that's okay, that's okay. We've got 5 waves in this little structure here for wave C, so that's okay. This is all okay. Yeah, I mean, it's possible that this can be the wave 4 here. So yeah, I mean, it just helps us with a bit of clarity in the sense that if this is breached here, the way if this 29 here is breached, then you can be on the short side. So also too, it's good to, if I can just use these as examples here for over here. I can't draw on this side of the tick chart, so I'll just I'll just use one of these lines here then on this side. So, you know, if this is the 29 here, then the market comes down. It normally has some sort of bounce. It'll either bounce off it or go through it and then come back up a bit. But if I just draw it out like this here, then that's the short trade here. If once you got the first low below the level, that becomes the reference point. And it's important because it saves you getting trapped, because this is the first low here, then the market goes back up, so that becomes your reference point here. You can shift your reference point on the second low here too. You can come into this space here, and if it's breached, you come down again here as well. But doing this saves you getting trapped. It's the same thing here. This is your reference point low here. Then you could use, once this one comes in, then you could use that one there as well. It just saves you from getting trapped, that's all. So that's what you need to do over here as well. So I can draw on this side here. So if it comes down and bounces, it needs to come down here. Anyway, you got the idea. I don't need to go on there all day. Otherwise, if you want to go long, then go long on 29.10 here as the support. Okay, then you'll be sort of little in there a little bit early, but that should be okay at that particular point. I don't really have any more to add to that. So that was just the slight dilemma that I had here in between those two counts, and also, you know, shorting a new low of having the 2900 as a retested resistance here would be the safest short trade, and then we can just stay in here all the way down here. Okay, that's it. Pretty short and sweet. Okay, thanks.